trade budget on Sunday. Contrary to expectations, there were no big sops for states headed for assembly elections, no big bang announcements as well. But the global headwinds clearly cast a shadow as the finance minister delivered her speech, promised fiscal consolidation, capex increase, customs duty tweaks and measures that she said will shield Indian exporters from the Trump tariffs. The big takeaways, specific announcements made in that speech. Capex is up from 11.2 lakh crores to 12.2 lakh crores. So the government continues to push for capital expenditure. Rupees 10,000 crores for small and medium enterprises growth fund set up. 40,000 crore rupees outlay for electronics manufacturing scheme, that's up from 22,919 crores earlier. SEZs allowed to sell in domestic tariff area at concessional rates of duty. Customs duty cuts on inputs to boost labor-intensive sectors like textiles and apparel and leather. Tax holiday till 2047 for foreign companies, data centers in India. Income tax rates remain unchanged. Compliance norms, though, have been eased. So the government hoping that this will at least give some kind of further growth momentum at a time of global headwinds. Joining me now, my first guest is someone who knows a thing or two about making budgets. He's delivered at least 8 budgets from what I recall. P Chidambaram, former finance minister, joins us. Mr. Chidambaram, predictably, you've been very critical of the budget, saying that it does not address the core concerns at the moment facing the economy. Can you be more specific? What could the finance minister have done that you would have done if you were finance minister?
The second part of the question is not relevant, but I'll answer the first part of the question. I have issued a statement at the press conference today, earlier in the evening, listing at least 10 or 11 challenges mentioned not by me, but in the economic survey. The economic survey presented by the chief economic advisor lays out 10 or 11 challenges. Now, I'm surprised and disappointed that the Honorable Finance Minister has not devoted a paragraph or two to each challenge. Each of them is a major challenge. I'll give you some examples. The penal tariffs imposed by the United States that have created stress for manufacturers, especially exporters. Second, the growing trade deficit, especially with China. Third, the low gross fixed capital formation, which is stuck at 30%, and the reluctance of the private sector to invest. 4, and I'll stop here, the uncertain outlook for flow of foreign direct investment into India and the persistent outflow of portfolio investors for the last several months. Some of these should be addressed, and our government,
but the finance, sir, with due regard, Mr. Chidambaram, with due regard, sir, the finance minister would say she has addressed them. For example, when you look at trying to protect Indian exporters from the Trump tariffs, specific customs duty exemptions, for example, given to seafood manufacturers, many of whom have taken a hit in aquaculture because of tariffs. You have protection given to leather, textiles. She says we have made efforts to protect, insulate our key areas which have taken a hit because of Trump tariffs.
Paragraphs, and I'll comment on that.
Yes. Mr. Chidambaram, let's look at specific areas.
Show me the paragraph.
She, in her speech, Mr. Chidambaram, has given customs duty breaks, for example, for those who are in seafood manufacturing, textile apparels. She's also encouraging through data centers to be set complete tax holiday till 2047. thereby hoping that you will have many of the major companies in cloud services coming into India.
Why don't you point out the paragraph or the page?
Sir, I have with me all the questions before me. I have taken down all the points. These are major points that she has made in her speech today.
Next question. If you show me the paragraph or the page, I will answer why that paragraph or the page does not address the concerns raised in the economic survey and my concern. If you are not able to point out the paragraph on the page, please move on to the next question. We'll come back to
sir,
it on another day
what?
or another time.
No, Mr. Chidambaram, I'm not going by the page number. I'm going by the speech that she has made. In the speech specifically, she has referred to various custom duty exemptions. She has put a certain outlay, for example, for electronic manufacturing scheme. They have spoken of 7 high-speed rail corridors between cities. The fact is, they've increased, in a way, benefits that NRIs can get who wish to invest in India in specific areas. I am giving you the big picture. You're telling me none of those points that I'm raising, for example, the SEZ point, none of them in any way.
Of this monologue, Rajdeep.
Sir, go ahead.
What is the point of this monologue, Rajdeep?
You tell me why you think that the budget has not addressed the issues. I won't answer. You answer.
Tariffs issue and the stress it has caused to all manufacturers has not been addressed. If you tell me I'm wrong, this paragraph or this page addresses this issue, I am bound to respond. But I've got the entire speech in front of me. Anyway, please move on to the next question.
Sir, okay. Let me raise the question. For example, put to you specific the capex hike, for example. The sustained increase in government expenditure continues, capital expenditure continues. At the same time, the government has maintained the path of fiscal consolidation, which is now pegged at 4.3% of GDP. I want to understand from you, don't you applaud, for example, the fiscal discipline shown by this government?
All right. I've understood the 2 questions and I'll give you specific answers. Take capital expenditure. On the capital account, the budget estimate was 11,21,090 crore in 25-26. But they actually spent only 10,95,755 crore. There was a cut in the capital account by almost $1,44,376 crore. And I'll break it up to you. This 1,44,376 crore, the center capital expenditure was cut by 25,335 crore, and the state's capital expenditure was cut by 1,19,041 crore. Now, the center must explain why there was a cut in capital expenditure in 25-26 and why the states, despite the assistance allegedly extended by the central government, did not spend the entire capital account amount and cut it by 1,19,041 crore. Next year, they have planned a budget estimate is 12,21,821 crore. It's a sharp increase. But giving this year's record, why do I attach credibility? How do I attach credibility to next year's account? So you must explain why the capital expenditure in the 25-26 was sharply cut and why you think that the boost in capital expenditure budget estimate for next year is credible. Then we come to the fiscal deficit and revenue deficit. Now please listen to these numbers. The fiscal deficit for 25-26 was projected at 4.4, and I'm glad that the revised estimate is also 4.4. But for next year, the budget estimate of fiscal deficit is only 4.3. It's 0.1%, and that's why I said in my statement, agonizingly slow pace of fiscal consolidation. The target, remember, is 3% under the FRBM. At this rate of reducing the fiscal deficit, it will take 13 years to reach the target of FRBM of 3%. It is agonizingly slow. It is not an aggressive, bold move for fiscal consolidation. I would have advised a bolder move of fiscal consolidation. On the revenue deficit side, the current year budget estimate was 1.5 and the revised estimate is 1.5, and the next year's estimate is also 1.5. Only 10 days ago, Dr. Rangarajan pointed out that revenue deficit is as important as fiscal deficit because you are borrowing for revenue expenditure. If your revenue deficit does not reduce at all for 2 years, what kind of a fiscal consolidation is that? I'm not saying that they are anti-fiscal consolidation. I'm saying they are agonizingly slow in fiscal consolidation.
You know, you're using that. These are very difficult. There are global headwinds at this time. You said that they have not addressed some of the issues that have been raised, for example, in the economic survey. Now, one of those issues, obviously, is the geopolitical risks that are entailed, and this is partly to do with US tariff strain. Now, the government says, we've given concession for special economic zones. She announced a special one-time measure to facilitate sales by eligible manufacturing units in SEZs to the domestic tariff area at concessional duty rates, modernizing textile clusters, addressing the duty structure in labor-intensive areas, and learning from container shortages, a 10,000 crore container manufacturing schemes. Now, all of this, the government believes eventually the semiconductor scheme, 40,000 crore increased outlay to launch Semiconductor Mission 2.0. All of this, the government hopes, will in some way spur a sense of investment growth to counter any impact of tariffs. You don't seem to agree.
You didn't ask me a question. I agree, these are steps. But similar steps were announced last year. Similar steps were announced year before last. But why is manufacturing stuck at 15% of GDP? That's my question. I've been asking this question for quite some time. Intentions are good, but why is manufacturing stuck at 15%? In UPA time, the manufacturing was a higher proportion of GDP. It's come down to 15%. It is stuck at 15%. So you tell me, what is your goal to increase the manufacturing proportion of the GDP? And let's measure by the results. These steps are visible steps. These steps are no-brainer. You must give concessions, you must do this, you must do that. But this has been done for the last 3-4 years also.
So what's your reading? Why do you believe manufacturing and private investment has not stepped up?
The government. I am not the government. I don't have full information. I am only the opposition. We can point out the errors. And I'm not pointing out my errors, the errors I found. I'm pointing out from the economic survey. The economic survey is presented by somebody who's fully knowledgeable about the state of the economy from within the government. You tell me why you have not addressed these challenges listed in the economic survey.
The tax holiday for cloud service providers, a tax holiday till 2047 to any foreign company that provides cloud services to customers globally by using data center services from India. Positive step or not?
I welcome that. But let's see the next year. They have announced it this year. Next year and the year after the next, we see the results.
Investment limit for NRIs increased from 5% to 10%. Overall investment increased to 24% from 10%. The hope is greater participation of NRI capital and improved access to long-term overseas funds. Positive or not?
But why is private investment in manufacturing, private investment in India, in all sectors of the economy stuck for the last 4 years? I can point out numerous occasions when the Honorable Finance Minister requested them, pleaded with them, chided them, scolded them for being sluggish in private investment. Just go back and see the script of her speeches in the FICCI and CII. For the last 3 years, she's been cajoling, pleading, begging, requesting, chiding, scolding them. But why is private investment stuck? Why is it not moving away from the sluggish state to an active state?
Mr. Chidambaram, Ms. Sitharaman at the very outset outlined 3 main duties or kartavyas for the government. Speed up and keep strong economic growth by making India more competitive. Build their skills so that they turn into active partners in country's journey to wealth and success, and make sure everyone benefits. These are the 3 kartavyas that she has put, which she says is the basis of this budget. You don't seem to agree with any of these 3 kartavyas.
I mean, why do you assume the answer? You ask me, do you agree or do you not agree? You say you don't seem to agree. Do I have to agree with you?
No, you don't.
First of all, the kartavya has an English word. The Hindi version can be kartavya. I found the English meaning of kartavya. It is responsibility, duty. Fine. So it's a responsibility of the duty of the government to set out 3 goals. They have set out the goals. Why should I disagree with the goals? The goals are splendid goals. But the question is, what is the proof of the pudding? What is the result? What is the outcome? Outcome is sluggish investment and manufacturing stuck at 15% of GDP. Maybe
okay, one final question. One final question, sir. What would you have done? What is that one thing you would have done that you believe the FM didn't do?
No question. What would we have done? I'm not in government. I don't have full information.
No, sir, but you, sir, that you are now copying out from that answer. When you criticize a budget, give me let's assume you're a shadow finance minister. I know we don't have a shadow cabinet. Forget about information. What is the one reform you would have pushed that you believe would have raised, for example, manufacturing or private investment?
You give me all the information and data that is available to the finance minister, and I will produce a page on what should be done on manufacturing within 24 hours.
Okay,
the
I'm going to leave it.
Survey says what should be done.
I'm going to leave it.
Economic survey says what should be done. You follow your chief economic advisor. Why don't you believe your chief economic advisor? Why don't you believe Dr. Panagriya? I wrote a column, heed your favorite economist's advice.
Okay, I'm going to leave it there, Mr. Chidambaram. I think you've made your point, and I appreciate you joining us and giving us an opposition perspective on the budget. Thank you very much. Okay, let's continue our special focus on Budget 2026. Jayant Sinha, former MoS Finance, is with me here in the studios. He's also former Chairperson, Parliamentary Standing Committee on Finance. Rajiv Memani, President, CII. Naina Lal Kidwai, She's former President FICCI, and Siddharth Zarabi, Group Editor, Business Today. Suman Sinha, Founder, Chairman, Renew, is also with us. I appreciate all of you joining us. I want to come to you, Jayant Sinha, first, because leading up to the budget, there were presumably twin objectives: growth and stability. One would say this government has done very well on ensuring macroeconomic stability in tough times. Growth is where there are concerns, particularly with private investment, particularly with manufacturing. Your response: does this budget do enough to really trigger the growth engine?
Good evening, Rajdeep, and let's first understand that stability, in fact, is a precursor to growth. And the fact that our macroeconomic parameters are as stable as they are, with good growth, low inflation, fiscal deficit coming down, that's a great foundation for growth. But in this budget, there are three major growth drivers that we need to pay attention to. First and foremost, of course, is infrastructure. We've obviously been spending quite a bit on infrastructure in the past, and now with 12.2 lakh crores, high-speed rail, university townships, spending on roads, all of that infrastructure really will enable us to drive growth, make us more competitive, and add a lot of jobs in infrastructure. The second area that is going to be a major growth driver for us are the sunrise sectors of semiconductors, artificial intelligence, biopharma. In all of these different areas, massive allocations have been made. 40,000 crores for semiconductors alone. We've got, of course, for data centers, a tax exemption. That also is going to attract a lot of investment in this area. So these sunrise sectors are going to benefit greatly. And third, while you might not want to think of defense necessarily from a growth point of view, I'll highlight the fact that we are increasing our defense budget by 20% from 5 lakh crores to 6 lakh crores is a massive growth boost as well, because much of that is going to be manufactured here in India, much of that is going to be done through our MSMEs, and much of that is going to result in new research and development, new technologies that are necessary for national security. So, for example, drones. So if you look at these three big growth drivers, each one of them has got a massive boost. And of course, it's going to really help us continue to grow at 7% plus over the next few years. So I think the growth part is absolutely there.
You're saying the growth path is there, but as we've seen, we've simply not been, let's say, as competitive as the Chinese. And we are looking at export-led growth in tough times, signing FTAs. But the truth of the matter is, unless you get ease of doing business in place or speed of doing business in place, it's just not enough during a budget, Mr. Sinha, to make these announcements. The question is, between intent is right, where does the execution come in?
So China is a formidable competitor, and not necessarily because they follow a level playing field strategy. We know that they followed a mercantilist strategy. They've kept their currency at a certain level. They've been able to subsidize a lot of their companies and so on. So it's been difficult for all countries around the world to compete with China. But the important steps that we have been taking over the last few years, and particularly in this budget, through PLIs, through subsidies in certain areas, through tax exemptions, and importantly in infrastructure, is going to make a very big difference. And I'll come to one final point here, Rajdeep, as well, which is that we are very fortunate to be able to have a very significant build-out of our renewable sector. And as we build out our renewable sector, we are finding out that we now have among the lowest energy prices on the planet, because the round-the-clock solar pricing that we're getting with storage and so on is also going to allow us to reduce energy costs and make us a lot more competitive. That, plus the money that's being spent on railways and roads and logistics, I think is going to enable us on a level playing field basis, of course, to compete effectively with China, and not just China, Rajdeep, but with Vietnam and other manufacturing powerhouses as well.
Okay, let me take that. Since you've given us your perspective, I want to take it to those who actually run companies or are in industry, and I want to ask them that question to each of you. Rajiv Memani, President CII, to you first. Given the fact, as Mr. Sinha points out, that there are incentives in this budget for specific sectors, will the animal spirits of the economy really get triggered? Because the government says that they've done lots for corporate India, starting with corporate tax relief 6 years ago. And yet the truth of the matter is, when you look at the numbers, private investment is still less than what it was in 2019, pre-COVID.
No, Rajdeep, I'm not sure whether your numbers on private sector investment being less than 2019 is accurate. ICICI
As a percentage, it is.
ICICI Securities did a review of all listed companies, non-banking listed companies, end of 2025. We had the highest capex by private sector in 2025, which was almost 11 trillion rupees, 11 lakh crores, which was 20% growth over last year. This year, yes, for the first 2 quarters, the growth had slowed down because what was happening around the world, the tariff situation in India and others, I think people withheld their capex plans. But if you look at what happened in the last quarter and in the third quarter, we suddenly saw, as compared to third quarter growth last year, the project announcements were up by 18 to 20%. And I'm sure the momentum is growing. So I don't think, I have been listening to this narrative since morning that private sector is not investing. It's not true that private sector is not investing. You look at balance sheets of companies that you know of, and you can look at their balance sheets and see how much they've been investing. You look at newspaper announcements every day. So first is that. Secondly, can we grow more? Of course, we can grow more. India is growing, economy is growing, balance sheets are strong. Can we grow more? Definitely, we can grow more. I think there are lots of reforms that have happened on ease of doing business, on making India more competitive through factory production. A lot of new sectors which were not there till 3 4 years back, or 2 3 years back, opening up. I think we're seeing a lot of that happening. That will definitely speed up the capex, which hopefully we should give greater growth,
Right.
private sector capex growth in India. And thirdly, I think Jayant laid it out. I think there is enough ammunition in this budget to feed on growth. And I think one thing which I must say, this budget has done very well, because you also, please understand, if you have to maintain macroeconomic balance for India, last year our tax revenues were, as compared to the budgeted estimates, were down by almost 1.5 lakh crores. But in spite of that, we almost maintained the same capex trajectory. So there were lots of. So if you're looking at going forward, they have assumed a 8% growth of tax revenues for next year. So there is limited amount that the government can also spend. In spite of that, I think they've increased the projection of from 11.2 to 12.2 lakh crores. And more importantly, the initiatives that they have taken, for example, whether it is data centers, where large investments are coming, nuclear power, where large investments will be coming. They've said they've given full customs duty relief. On MROs, they've provided the relief, so it becomes more attractive for people to set up MROs. On rare earth and minerals, they provided the customs duty relief, which is there. So if you look at sector by sector, without spending too much, the nudge
Right.
to bring in private investment is definitely there in the budget. Yeah, and you're
Let me
absolutely
bring
right.
in Suman. Let me bring
Yeah.
in Suman Sinha at this point, because you're in a sector, renewables, which many believe is one of those sectors which is seen as sunrise, where the government has made a genuine effort to encourage renewable energy sector. Your response. Do you believe it's enough? Rajiv Memani says that, look, it's unfair to target private sector, but the growth has been uneven. Let's put it this way. Some sectors certainly have pushed ahead, others have stayed back. And we've seen this sort of W shape since COVID. Your reaction? Do you believe this budget has provided the growth momentum? It's focused on stability, but has it provided the growth momentum?
Look, I think that you can't just look at the budget in itself and conclude from there whether the government is doing adequately on providing growth stimulus. I think you have to look at what the government does across the whole year. And as somebody said in one of the conversations earlier this morning, that if GST had been part of this budget, all of us would have been saying that the GST, the whole budget is very reformist, but it was done earlier, and so therefore it wasn't part of this budget. So I think you have to look at the whole series of things that the government is doing. I think that there are many sectors, and I think the government has certainly picked on capex, for example, infrastructure, as being one of the big areas that it wants to get into and push hard. They have ramped up expenditure in infrastructure very significantly over the years and continues to do so. I mean, keep in mind that our inflation rate right now is about 2 or 3%. So even a 10% increase is a significant jump over inflation and in real terms. And then on defense, I think that's another sector where the government, obviously for geopolitical reasons and otherwise, is also investing a large amount of
Right.
money. So
Naina
I
Lal
think if you
Kidwai,
look at it across different
your
sectors.
view. You see, the one criticism that we are hearing since the budget is, could more have been done? I was speaking to someone, a foreign investor. He said this was not a breakthrough budget as they had hoped. My reaction was, It's tough in the tough times that we live with all the geopolitical risks to suddenly have a breakthrough budget. His view was adversity should have been turned into greater opportunity.
I think that it's easy to say that, but the reality is
Let me get Naina in that. Let me bring in Naina because we have limited time. Go ahead, Naina.
So yes, we need the private sector to come in with more capital expenditure. I'm with Rajiv in saying that there's some happening, but is it enough? Clearly, the government doesn't believe so. And the sweet spot there typically is when capacity utilization goes north of 80%, which in many sectors it has not yet reached. So I'd like to come at it from the other side, which is what attracts industry to make that investment. And demand has to be a key part of it, domestic demand and exports. Both of those then ensure that capacity utilizations go up. And as capacity utilizations go up, the investment into those sectors then begins to happen. How will capacity utilization go up? I think there are a couple of indications there. If you look at the fiscal deficit glide path, it's actually quite soft while adhering to what had been promised. It's a 0.1% improvement or drop from where the 4.4 is what we believe would be achieved by this March. And the promise is at 4.3. So it's not so high as to remove incentive and liquidities in the system. While maintaining that glide path, capital expenditure from the government side going up, which improves logistic costs. There's very high capital allocations down to the states. And all of this, again, helps make industry attractive enough to look at that CapEx cycle. How does domestic demand go up? There are a number of measures on job creation across sectors.
Right.
We heard for healthcare, tourism, which is a big one, which will provide, again, employment. And as much money as we put into people's hands, that in turn translates to consumption, demand, and therefore CapEx. So the job creation, job employment, high deployment into sectors which are labor intensive is, I think, a key aspect of the budget which we should not ignore. On the capital side of the budget, I think one of the things that Jen touched on, but I want to build on, is the urban infrastructure and the fact that the desire now is to look at urban infrastructure through cluster development of what are really going to be tier 2, tier 3 cities, and the creation of an active municipal bond market which enables the financing of these cities. The connectivity between cities by these rail corridors. So the concept of urban development getting a sort of renewed attention
I've just got a minute. I take your point. Conceptually, in terms of intent, the government is pressing the right button. But Siddharth Zarabi, we've seen intent has to translate into execution. Smart cities is a good example. The track record is a mixed one. The government presses the right buttons, but states will have to respond. You earlier today told us about the 16th Finance Commission and its recommendations. A lot of the heavy lifting has been done by the center so far. It's going to now translate to states, to private industry as well. Do you believe that this budget has set the right direction? Now the question is execution, or the challenge is execution.
Rajdeep, let me take the example of the very ambitious expansion as far as the high-speed corridors are concerned. I put that very same question to I&B Minister Ashwini Vaishnav, who is also the Railways Minister, just a little while ago. What are the numbers? 7 high-speed corridors, because all attention has been focused on Mumbai and Ahmedabad, and these are in the southern states. And therefore, no one can raise any politics around it. They have been given to states which are not necessarily ruled by the Bharatiya Janata Party. 16 lakh crore of investment, 4,000 kilometer of world-class high-speed, what may be called a bullet train corridor. Why did the Bombay and Ahmedabad one get delayed? Purely politics. We know that the Shiv Sena, as it was existing then, delayed it. Cost overruns went up from 1 lakh crore, that project went up to 2 lakh crore. So very clearly, the intent on execution exists, but it is for the states themselves. And when I asked that question to Ashwini Vaishnav, that how will the states respond, he said they are all welcoming it. So
a consensus that despite politics, you will let business and execution of ground level projects happen. And Rajdeep, if that project were to take off, it's probably a 10, 15, 20-year project. I'm telling you that the incremental impact on GDP growth will be phenomenal.
Okay, let me leave it there. As I said, it's only day one. The devil often in the budget lies in the detail. The instant reaction of the markets clearly was linked to the hike in Securities Transaction Tax. But we will wait and see how all of this plays out in specific sectors in particular. This was the sector-driven budget, if you want to call it that. Some called Nirmala Sitharaman today Tinker Raman, others said Focused Raman. You can choose whichever side you are in that. She was focused on specific sectors. Others said she tinkered too much with the budget. Let's leave it there. I appreciate my guest joining us.